And welcome to Inside India. I'm Christine Tan, sitting in for Sri Jegarajah. Here are your headlines. Trade negotiations are front and center. Canada and the U.S. agree to resume trade talks after Canada backs off its digital services tax. President Trump looking for India to drop its trading barriers as talks between the two were said to have hit a rough patch. And India's finance ministry calling on state banks to step up lending and pass on rate cuts after the RBI's jumbo 50 basis point cut earlier this month. Well, let's take a look at Asian markets this Monday morning and see how it is stacking up. As you can see, a little bit of a mixed picture. Investors keeping an eye on a huge spending tax cut and the spending bill that's going through in Congress at this point in time. So a little bit of a mixed picture, a bit of wait and see, as you can see. But really, if you could take a look at the gainers, the Nikkei 225 really powering the gains. They're 1.6% higher. Tech stocks leading the charge there. Straits Times Index elsewhere trading a little bit flat at this point in time. And China releasing manufacturing activity numbers this morning and showing that factory activity still shrinking in June. Official manufacturing PMI coming in at 47.7, just below that boom or bust line of 50. It's the third straight month that activity has contracted as the trade war continues to keep a lid on sales and demand. Lots happening on the trade front. Just in the last hour, Canada revoking its digital services tax that President Trump said was hindering trade talks. The two countries will now resume negotiations aiming to reach a deal by July 21st, much later than the tariff deadline of July 9th that's looming large. Meantime, U.S. and China have squared things off, with China confirming that both sides reached a framework for their Geneva Agreement. And when it comes to India, chatter is that New Delhi was of trade talks with the U.S. hitting a wall, even as President Trump continues to say that he will ink a pact soon, but wants trade barriers to drop completely.
You know, we have 200 countries, you could say 200 countries plus. We can't do that. So at a certain point over the next week and a half or so, or maybe before, we're going to send out a letter. We talked to many of the countries, and we're just going to tell them what they have to pay to do business in the United States. And it's going to go very quickly. But some of the bigger countries, so India, I think we're going to reach a deal where we have the right to go in and trade. Right now it's restricted. You can't walk in there. You can't even think about it. We're looking to get a full trade barrier dropping, which is unthinkable. And I'm not sure that that's going to happen. But as of this moment, we've agreed to that, go into Indian trade.
Well, meantime, Trump's administration is also talking to Japan, but still struggling to come to an agreement on tariffs. CNBC Kari Joji has been watching the issues very closely, has the latest on those talks for us. Kari, what are you hearing?
Well, Christine, seventh time that Yusei Akazawa, the lead trade negotiator, made it to Washington, but he couldn't get FaceTime with the Treasury Secretary. He did meet with the Commerce Secretary for 65 minutes. He called him the next day twice, once in the morning, once in the afternoon. Was supposed to come back to Japan on Sunday, but now coming back later on today, extended his trip without that FaceTime with the Treasury Secretary. During that time, President Trump gave an interview to Fox TV, and he said, look, the trade imbalance with Japan is unfair. I haven't heard the actual interview, but local press is picking up the part where he said, look, I can write to Japan and say, dear Japan, the auto tariffs are going to remain at 25%. This is not what Yusei Akazawa wanted to bring home as a souvenir, because this has been the crux of the negotiations, because the Japanese auto industry is the center, the epicenter of the Japanese economy. Now, whether or not they got to the point where they can discuss a package deal, we will know soon, because I'm told that Yusei Akazawa will be meeting the press as he lands in Tokyo later on today. But we know that this moving target of July 9th, it could be extended a few weeks. It might be Labor Day now. But even with that moving target, the Japanese automobile sector cannot make long-term plans with this limbo situation. For now, the big names like Toyota are announcing record deliveries globally, especially in the U.S., because if you're in the market for a Lexus or if you're in the market for a Prius, you probably wanted to buy it before the prices got any higher. And Toyota has increased prices, although they're saying it's not because of the tariffs. So I think after round 7, there isn't a whole lot of clarity. Remember, Akazawa-san went into this meeting saying that he was in the fog. I'll be very interested to see how he characterizes the negotiations, especially after the president said that the relationship was unfair, Christine.
Round 7, round 8 to go. Kari, thank you so much for that. Kari and Joji watching, of course, trade talks very closely there between Japan and the U.S. Let's check markets. Indian markets coming online in about 45 minutes. Here's what the GIFT Nifty futures are indicating at this point in time, signaling a positive start to the Nifty 50, which is now sitting at 25,637. Right. After the break, we'll take a deeper dive into India's manufacturing space after this short break. Stay with us. Welcome back. Senate Republicans are racing to push through President Trump's sweeping tax bill in what's been a marathon weekend on Capitol Hill. This after Senate Democrats narrowly advanced it to the debate floor. And it also comes as the nonpartisan Congressional Budget Office estimates the bill would add over $3 trillion to the U.S. debt pile over the next decade. NBC's Ryan Nobles has more.
Democrats forcing the Senate clerk to spend nearly 16 hours reading every word of what President Donald Trump has dubbed his big, beautiful bill.
139L, the following new.
That bill could add more than $3 trillion to the deficit over the next 10 years. The GOP wants to overhaul social programs like SNAP, also known as food stamps, and Medicaid. The cuts to Medicaid are what led North Carolina Republican Senator Thom Tillis to vote against moving the bill forward, prompting threats from President Trump to meet with primary challengers. Then today, in a shocking announcement, Tillis announced he would not seek re-election and slammed gridlock in Washington. The Senate's bill would tweak the way states receive Medicaid funds, reducing the amount they take in via a special tax, instead creating a $25 billion fund to help support rural hospitals. The new funding formula leaving people like Sierra Matthews from Missouri worried her hospital could shut down.
If we take that away from a small rural area already, is that another 2-hour drive? Is that a 3-hour drive just to see a doctor?
Democrats argue the bill's growth is out of control.
This bill stinks. It's a moral abomination. Everybody that learns about it hates it.
It's filled with special carve-outs, like $85 million to move the retired Space Shuttle Discovery from a museum in Virginia to Texas, the creation of a $1,000 Trump saving account for all newborns, and requiring a $100 fee for anyone applying for asylum.
President Trump is popular, and the bill is extremely popular.
Well, companies all across the world are bracing for impact from tariffs imposed by the United States and looking at ways to diversify. Lin joins us now. Lin, you spoke to one Japanese company about that. Tell us more about it.
Indeed, Yaskawa Electric, this is one of Japan's biggest industrial automation companies, and recently they had announced that they had invested $180 million into the US over the next decade, which is a consolidation as well as an expansion of their US headquarters, production facilities, as well as training centres. Now, I asked the president directly, was this a result of US tariff policy? And he says that whilst the timing is good, that this was actually something that was in the works for some time now, that they see this as aligning with their longer-term strategic vision, given the US market, he says, is known for its tech leadership as well as AI leadership. So they see that synergy, particularly with AI-enabled robotics, as well as sort of that high-end automation type solutions as well. Now, I also asked him about the tariff impact. He said, look, the 10%, his customers in the US, this is, of course, a business-to-business, relationship, that's something that they can stomach. But anything above that, that 24% is giving customers pause, as well as as they think about their capex spending. Now, they also see as well that whilst they deal with the challenges in terms of tariffs, the need to diversify, particularly as the competition in the Chinese market has been intense, and India is one of those key markets for them. Let's take a listen to what the president had to say about their India strategy going forward.
We already recognize real growth is confirmed in India, especially, as you know, Yaskawa already started to the inverter business. Inverter is used in the infrastructures, so HVAC and elevator, escalator, etc., and oil and gas. So that point is the inverter volume is going up. So that means such kind of investment already started in India. So that this means this sign is India economy will be going grow. So then we decided to more enhance to India business. So based on the existing reliability, existing business base. So Yaskawa is very unique. We already have the factory of the inverter in India, and the robot business already started. So that is much earlier timing rather than our competitors. So we already recognize some India business, but so more huge, bigger channel establishment built is important. Then we would like to invest some capability into the India in the near future. So that process is already decided, but what to do, so detail is under that consideration right now.
So we're hearing the President, Ogawa-san, saying that at the moment, when it comes to India, the focus here is on sales and distribution networks, because keep in mind that India also implements tariffs in terms of robot solutions going into the country as well, but they are still considering what they do in terms of the localization of production in that market. And also they are looking and using some of their learnings from, dealing with the Chinese market in terms of local leadership as well, and implementing that into India going forward. Because keep in mind, when we look at the breakdown in terms of revenue by geography, and we do have some charts that we can show our viewers as well, the focus still is on Japan, China and the US. He didn't give me a breakdown in terms of the India market share at the moment, but we know that it sits underneath that 13% level. But certainly he's already seeing these applications, particularly, Christine, in terms of infrastructure projects in the country as well.
Diversification, Yasukawa. Thank you so much for that, Lin, talking to us about Yasukawa Electric. We're watching, of course, for India's May industrial output figures later this evening. A Reuters poll is expecting it to slow further from April's 8-month lows to 2.4% from April's 2.7%. This despite the government's push to boost manufacturing activity. Let's talk more about India's manufacturing strategy. Akhil Ramesh is the Director of India Program and Economic Statecraft Initiative at Pacific Forum and joins us from Hawaii. Akhil, good to have you with us. When you talk about India's manufacturing strategy, we know that the pivot started in 2014 when Modi launched a Made in India initiative. How much progress has India made?
Good morning, Christine. So they made progress, but the progress has been mixed. So they've managed to make in India for the downstream part of the supply chain, but the upstream still remains abroad. This has become a perennial challenge for the government because once you have a reliance on the upstream, you're increasing imports for the upstream goods. So in a sense, while there is some success with downstream, your upstream is still dependent on imports.
India's reliance, of course, on these inputs from China has not been reduced in a way. In fact, it's taken a different form. You mentioned the upstream-downstream relationship. How has that dependence on China evolved over the years, and how do you see it evolving in future?
So with the dependence on China, it was mostly raw materials and also on downstream manufactured goods. Well, the last 10 years, the downstream has come down, the upstream has gone up. And China has, in the meantime, used a strategy of denial, as some experts would call it, through export controls, by limiting India's access to these raw materials. So India's dependence on China for raw materials is actually severe, and the government is on a war footing and a war path to find alternatives because the export controls are eating into India's success of Make in India.
India, of course, reducing its dependence on China. 14 sectors, I believe, have been identified, and specific industrial policies were launched. Which sectors in India have had the most success when it comes to reducing its dependence on China?
So firstly, it depends on how you define success. If you call the success as downstream supply chains moving into India, I would say mobile phone manufacturing. Apple's iPhone is touted as a big success story. About 20 to 25% of iPhones are now manufactured in India. But that's only one part of the story, right? So the other part is all the inputs that go into the iPhones are still made in China.
When you look at Apple's production in China, it's a huge entire supply chain that's going on business. How much of that complex value chain can India replicate over in its country?
So there are multiple variables here. So one, of course, it's the Taiwanese contract manufacturer. There's then the American Apple iPhone, and then there's the leadership in these countries. So China uses export controls, but then you have policy inconsistency in Washington. A couple of years ago, friendshoring was a thing, but now onshoring is the new thing in Washington. So if President Trump were to change this policy of diversifying supply chains, moving supply chains out of China into not India, but into the U.S., then the entire process is slowed down. So these policy uncertainties and these supply chain diversification initiatives becoming part of trade negotiations make the process even more slower.
When it comes to manufacturing, do you think India has cultivated a workforce that is ready for manufacturing? I mean, there's a lot of debate about this issue.
That's true. India has challenges in workforce development when it comes to manufacturing. India has, over the last 2 decades, built a workforce for the service sector, for its IT and software development. But when it comes to manufacturing, it is still relying on foreign experts to train their local talent, which once again has become a challenge with many countries imposing visa restrictions on their experts to travel to India.
What's next for New Delhi? On the one hand, it's trying to reduce its dependence on China, but on the other hand, we're hearing talk that New Delhi is actually opening up dialogue and engagement for foreign direct investment coming from China.
That is true. I think New Delhi is realizing or learning a bitter lesson that China is is in the top of the pyramid when it comes to the hierarchy of value chains. China has mastered manufacturing both upstream and downstream, and also has the experts to train its workforce. So over the last 7 or 8 months, New Delhi has been making inroads in terms of getting access to critical technology from China, and also making peace on the political front. Most recently, they had the Kailash Manasarovar pilgrimage open up to Indian tourists.
And also, what does this mean in terms of negotiating closer ties? At the same time, India, we know, is negotiating closer ties with India. This kind of runs counter to what's happening on the foreign policy front, because we know US and China are at loggerheads right now.
So India, ever since the Bandung conference back in the day, and when the Cold War was at its peak, has mastered non-alignment. In the 21st century, it calls it multi-alignment, and it has good relations with Russia, with the US, and it is trying to reset ties with China. Because let's face it, India has many challenges domestically, so India has to make friends and cannot be political or ideological when it comes to making partnerships.
Where do you see government policy heading next?
So the government policy, the next step would be, natural step would be to reduce reliance on China, but also build or cultivate the homegrown talent, whether it's upstream manufacturing or also having partnerships with countries that can provide the alternatives to China, particularly in the raw material space. So we see that happening a tad bit, I would say, with raw materials and critical minerals. Indian government is finally waking up to the fact that critical minerals are the most controlled export of China's, and India has to tap into its reserves. India is the top 10 when it comes to critical mineral reserves, but it does not, exploit it. So it is beginning to look at it. So I think that's the one good way to approach the challenge.
India has set a target initially of raising its manufacturing from 15% in 2014 to 25% this year. Is that deadline, is that target likely to be achieved sometime in future, in the next 5 years?
It's hard to say, because there are too many variables. There's the political uncertainty, there's the geopolitics playing out with conflicts around the world. And then domestically, in 5-year term, I think that'll be the new government, possibly. And in these next 4 years, there could be macroeconomic stability in India, but at the same time, the winds of friendshoring could move away, and onshoring could be the preferred choice for many nations around the world, which could derail some of India's plans. So it is to be seen how policy uncertainty in Washington and other power centers play out for these alternatives to China, such as India.
Akhil, do you question China? Do you question India's foreign policy? Because on the one hand, we know it is trying to boycott Chinese goods as well. I'm just wondering, it's a little bit of a tug of war here. I mean, what's going on, and does it need to have some clarity on how it needs to go ahead on its engagement with China?
So I would say there's a diversity of thought in Delhi. You have the commerce minister who has advocated that ties with China are a challenge, and he has wanted more, I would say, export controls and limited Chinese involvement in the entire value chain. On the other hand, you have the economic advisor to the prime minister, Anantha Nageshwaran. Dr. Nageshwaran has always advocated for having more access to Chinese goods and being plugged into the Chinese value chain. So you have this differing ideas of how India has to play on the global stage. So this, I think, difference of opinion is what's playing out right in Delhi right now.
Akhil, when it comes to decoupling from China, and I know there is still a long way ahead, do you ever see that happening?
De-risking, yes. Decoupling, no.
All right, Akhil, we'll have to leave it there. Thank you so much for your time. Akhil Ramesh from Pacific Forum. Well, coming up next, we'll take a closer look at the Indian markets. Let's take a look at the Nifty, looking to start second quarter of 2025 with a positive momentum. Right now, the Nifty is sitting at 25,637 and looks like a positive start when it comes to trading later today. Kieran Calder of UBP will join us next for a deeper dive into the Indian markets as well as the rest of Asia. Stay right here inside India. We'll be right back. Welcome back to Inside India. We're now counting down to the market open in India, and this is how we are shaping up. As you can see, the Nifty 50 sitting at 25,637. Futures are pointing to a positive start to the Indian market. Dollar rupee sitting at 85.4860. And to the country's biggest public offer so far this year, HDB Financial Services seeing a strong investor interest, getting bids worth $19 billion overall. The $1.5 billion issue has been subscribed 16 times. Institutional investors flocked to buy the offer, bidding 55 times the shares reserved for them. But retail investors still not showing as much interest, subscribing only 1.4 times. That did not stop it from becoming one of the most subscribed IPOs since 2021. We will be watching how shares open up this coming Wednesday. Meantime, the Indian market regulator is cracking down on stock manipulations. The regulator, SEBI, said it found incriminating evidence of pump and dump activities. It refers to participants inflating the prices by increasing buying activity in a particular stock. That in turn lures other investors to purchase those stocks. These participants then exit the stock at high prices, booking profits. And moving on to India's lending push, the Finance Ministry is asking public lenders to scale up loan activity. Government encouraging banks to boost credit to small businesses and mobilize their deposits. This comes after the Finance Minister Nirmala Sitharaman chaired a review meeting with the banks following the RBI's jumbo 50 basis point cut this month. India has been falling short of its GDP growth target range of 7 to 8%. These measures are seen as part of the government's efforts to boost growth and achieve those targets. Let's talk about India and the rest of Asia. Kiran Calder is the head of Equity Research Asia at UBS. Kiran, good to have you with us. When you look at all these news headlines coming out from India, how bullish are you on India?
We have a generally positive view on India. It's, I think, fallen back a little bit in importance as the trade talks come to the forefront, where obviously the most important countries in Asia related to the trade and tariff talks are China and then Japan. So I think it's fallen back a bit there. For us, we really want to focus on quality in India. So, a name like HDFC Group, another company coming to market, is interesting to us. But it's also a momentum-driven market from a retail perspective. So, market hasn't been particularly strong recently. Retail interest in that listing, not there yet. But we think there's room to turn around, and we're a buyer of India on dips.
Okay. When you look at news flow today, Yaskawa Electric, a Japanese company now looking to diversify from Japan, China into India. To what extent is India going to benefit from China Plus One strategy?
It's a logical beneficiary, certainly, if the infrastructure improvement continues. So, China Plus One normally means Vietnam, some of the other countries of ASEAN. So India is a little bit further. With Yaskawa, it's closer to some of its European clients. So that may be part of the drive there as well.
Mm-hmm. Over the weekend on Friday, we had that so-called trade truce between U.S. and China. Not much details. Both sides confirming a deal was done, a framework was put in place. But do we need to see something that has more meat on the bones before we actually can say it's a done deal?
Yeah, of course we do. I think, it's part of the show. So I think some of the most important countries for tariffs are going to be China in Asia and also in North America, Canada. And so we've seen a little bit of to and fro on both of those. Stop-start. Truce is better than walking away from the table, but walking away from the table also really leaves room for a dramatic re-entry, which is also what we've seen from Canada with the recent announcement rolling back the digital services tax as a way to re-engage.
10 days before their deadline. What's likely to happen in terms of markets, in terms of news flow, and how do you trade depending on what comes out, with U.S. India, U.S. Japan, U.S. India?
Yeah. So obviously there's extreme uncertainty in terms of trade policy and what deals get done. We think over time we'll start to see some trade deals fall into place, and we also think that that's the that's the aim of the Trump administration in this whole sort of process. And then you have to keep in mind the political calendar. So we don't want to get too late into the year and still have a lot of this, uncertainty going on as they're heading into midterm elections in the U.S. over the next 1 year from then. So we think, we've probably passed the point of peak uncertainty, and it's going to start to improve from now, we expect.
Okay, so what markets do you like then?
So, we like equities, and we have a full allocation to equities within a global balanced portfolio. We've become a bit more positive on China recently, where we had liked the sort of internet platform segment of the economy, but a bit less positive on old economy, especially real estate. But we think now they've started to show some significant, at least acknowledgement and measures as well towards resolving some of that. So while we still like the sort of new economy part of China, we would be more neutral on China as a whole. We also like, by sector, we like tech. Still, we think leading sector globally. We like healthcare. We think things are becoming a bit more, getting a bit more visibility into tariff impact on healthcare, where it's going to hurt and where it's not going to hurt. And we've recently become from negative to neutral on energy. And so ahead of what happened with Iran over the brief window there, but we think it's more a neutral view on global energy is appropriate at this moment.
Okay, so you like tech and the platform moves over in China. How do you view the recent PMI data that just came out this morning? I mean, a lot of talk, the fiscal stimulus could be in the works in the second half of the year. Are you betting on this, and could this help boost the rest of the economy? And if so, what sectors do you like?
Yeah, I mean, there's always talk of a fiscal boost in the second half of every year with China over the last 3 to 4 years. We think, of course, we're hopeful. The authorities, know what the problems are. They're very slow, and they go by their own political calendar in terms of the work party. This will be the new 5-year plan coming up. We think all of that will be addressed at some level. But the existing numbers which are coming out, which are relatively soft, reflect the problems that everybody knows. If it was easy to solve the slowdown or the non-pickup in the Chinese economy, it would have happened already. There's a lot of things like real estate, bank loans, et cetera, which are weighing down the overall economy. And again, we think the way to avoid that is to focus on the growth names, the platform names that we mentioned earlier, pretty immune from tariffs, very little business outside of China. And we think that's the way to play at the moment.
Would you say that the bottom has reached in terms of the problems in the property sector, the real estate sector? Are you looking to get in at some stage when you think things have kind of bottomed out?
So take it 2 parts. I think it's likely that we have seen the bottom. I mean, we were looking into the abyss when the government was basically ignoring the problem after creating it itself at some level. And so we think we've started to see some measures as probably the bottom. We think there's much more attractive sectors, though, for us to invest in within China. Okay.
Do you like the EVs, though? I mean, we have Baidu, Xiaomi, Xpeng. I mean, these EV makers are really, really up in business and, elsewhere in the region as well, not just in China, but elsewhere in the region as well.
Here in Singapore as well. Yes, we like the China EV story. We think there's way too many China EV players, and there's likely to be consolidation, especially as, some markets, global markets to them are out of bounds. And we think that BYD is likely to be a leader in that consolidation. So, yeah, we like that sector, and we like the leading names in that sector.
Who's going to fall victim to consolidation?
Wish I knew.
Okay, but there's going to be consolidation in the EV sector.
We would expect so, yes. Yeah.
When there's just so much competition, though, I mean, you've got to ask yourself what are the margins like? You're actually pressing volume as opposed to really selling cars that are profitable, right? Yeah. Is this something that you look at when you look at which EV makers to invest in China?
Yeah, I mean, so there are names which are subscale now, which are likely going to have to, unless they find big new markets that others haven't found, i.e. unlikely. We think some of those smaller names which are not at scale yet and which have subpar margins are going to have to roll up into some of the larger names. And so we think consolidation for scale is probably the story.
Okay. What about Japan? What do you like in Japan? Japan seems to be picking up. I mean, the market is soaring today, up 1.5%. Tech stocks are really getting a big boost here. What do you like? What do you see in Japan that you like? Where are the opportunities?
So in Japan, we think, there's a few things which like one-time events which happened, like the beginning of normalization of rates, the move on corporate governance, which are starting to be a little bit long in the tooth at the moment. But we think the one where we've still got some upside is on rate normalization. So, we still see, for Japan anyways, hot inflation numbers coming out. The Bank of Japan is very cautious, even in the face of that. But we think overall we are going to see some spread widening in Japan. So rates go up, long rates go up, short rates go up a little bit less. And those spread widenings are obviously good for banks. So the mega banks look good in that perspective. They're also leader and have been, even before the recent push on corporate governance, have been leaders in buybacks, dividends, expanding, et cetera. And then also the insurers, depending on how they manage their book, can also benefit from that rate expansion.
You seem to like banks. What about banks in the U.S.? They seem to be going through a stress test right now.
Well, yeah. So this year's stress test, the results were published on Friday, and of course, depends on the input and what sort of variables they apply. And this year was a little bit less tough than last year, but the numbers were extremely strong for especially the largest banks. It's likely we're going to see a decline when they publish the full year this year's update of the large bank capital requirements, which is later in July or August. We're going to see a decline in those capital ratios. And behind the scenes, we've also seen moves, sort of deregulation agenda emerge at the Fed, with the new vice chair for supervision, Michelle Bowman, has come in pushing on supplementary leverage ratios. The Fed has also made some proposals for expanding or basically taking a 2-year average in terms of stress tests for looking at stress capital buffers, which is one element of the capital requirement. And also giving greater time for banks to work into the new capital requirements. All of this, and both of those, by the way, are out for like a 60-day public review, so you'll see some of the banks feed in on that. But there's definitely deregulation momentum within the banks. Based on the numbers that were put out in the stress test result on Friday, there could be up to $200 billion in excess capital sitting in the top 6 banks, which may be distributed to shareholders over time. That's almost 7% of market cap of those top 6 banks. So banks are strong. The only headwind facing the banks in the U.S. is the economic uncertainty. And if we start to get more clarity there, then they should continue to do well, which they have.
We had some comments coming out from Trump questioning why Fed Chair Jay Powell is not cutting rates and he's looking to replace him. Is this something you worry about, the independence of the Fed?
I think yes. I think, in any case, we're going to have a new Fed chairman early next year. We expect that he'll let Powell sit out his term. But yeah, going forward, there is definitely questions around independence. There's a few candidates which have been mentioned, including the current, including Scott Bessent. He would probably be seen as, although he's certainly Team Trump, he's also someone from the markets and would be seen as someone who would be pro-independent, recognize that independence of the Fed is essential, rather than take orders from the president directly.
Okay. So what's happening over in the U.S. When it comes to trade flows, investment flows? How much of that investment for fund flows to Asia, and which markets are likely to benefit? And for instance, could India benefit from fund flows coming to Asia? To what extent?
From the U.S.? I think the message within the U.S., especially U.S. companies, is definitely invest in the U.S. And if you're investing outside of the U.S., do so quite quietly. And then the reverse, global companies, non-U.S. companies, certainly putting up big numbers around, we're going to set up a $1 trillion AI facility in Arizona from SoftBank. So I think, at the moment, the story is all about investment in the U.S. Rather than investment outside of the U.S. You mentioned earlier the sort of China plus one strategy. That would be more non-U.S. companies looking to diversify their supply chains within Asia.
Okay, and Kira, before we let you go, Canada now saying it's going to revise its digital services tax bill. Your thoughts?
Quite predictable, I think. So actually, this digital services tax, the real problem, it's a problem. It's no more tax. Canada doesn't need that. But the real problem was that they wanted to implement it retroactively, which is a remnant of the Trudeau policy. Mark Carney's quite a good politician. He's turned coat on basically all of the unpopular legacy policies of Trudeau, and this is the last one. So you can see how, against his pledge to come to a trade deal by Canada Day, which is tomorrow, he was holding that out as a negotiating tactic, and it was quite predictable, I think, that they would pull that in an effort to re-engage. He's going to miss his 1st of July target. He'll get a bit of pushback for that within Canada, but they're back at the table.
Okay, there's so many rounds in these trade negotiations. It's really hard to keep track of what's happening, right? Thank you so much, Kieran, for your thoughts today. Good talking to you. And that was Kieran Calder from UBP. Well, keeping it right here in Asia, markets in Thailand joining the trading day at the top of this hour. JP Ong joins us now with a closer look. JP, how are the protests impacting sentiment?
Well, it seems on the surface, based on how today's markets are moving in Thailand, it's not impacting it much. In fact, you're seeing the Thai set today trading in the green, and that's the good news. The bad news, unfortunately, Christine, is that this is only the 6th day that the Thai set is seeing intraday gains so far in the month of June. And still underlines the fact that Thailand's Thai set is still the worst performer in Southeast Asia year to date. In fact, they're the only ones that are clearly in a bear market and still in a bear, and have been in a bear market actually since mid-March, actually. Now, a lot of factors are influencing market uncertainty, actually, or market sentiment feeling more uncertain out in Bangkok. Among them, ongoing geopolitical tensions, and also the possibility of high tariffs imposed on them by the United States once the 90-day reprieve is actually lifted in early July. But these protests in Thailand that have stemmed actually from that leaked phone call between Prime Minister Paetongtarn Shinawatra and former Cambodian strongman Hun Sen actually is complicating issues actually and raising more uncertainty, especially given the growing number of Thais that are calling for the Prime Minister of Thailand to actually step down due to lack of experience and also for not putting the country's interests first, if mine, Christine.
JP, we're also hearing that the rift between Thailand and Cambodia is deepening. Tell us what's happening there and what could be the impact of that?
Let's talk about the recent deepening and how this has deepened even more, especially in the last 96 hours, Christine. This all stems, of course, from that border row actually in late May that resulted in one Cambodian soldier losing his life, and also the closure of the borders, and also that leaked phone call between Prime Minister Paetongtarn Shinawatra and the former strongman Hun Sen of Cambodia. Now, Hun Sen last Friday unleashed a massive and very dramatic tirade against the Shinawatra family actually in late Friday afternoon, where he did lay out a number of accusations, among them accusing Thailand of actually being complicit in some of the online scam call centers that are operating in Cambodia that resulted in the kidnapping of many Chinese to operate these scam call centers. He also accused Thaksin Shinawatra, the former prime minister, of actually faking his illness, and also said that he is accusing them actually of actually demeaning and insulting the royal family by demeaning the name or diminishing at least or disparaging that Royal Thai Army commander, because the army commanders in Thailand are actually appointed by the King of Thailand. Now, it's all interesting also, Christine, because these protests have grown actually to call for the resignation of the Thai Prime Minister. And in a recent poll, we've seen her approval rating in Thailand fall from 30% down to about 9.2%. So we're seeing a lot of pressure being piled on the Shinawatra family. And keep in mind also that tomorrow, the former Prime Minister and the father of Paetongtarn, Thaksin Shinawatra, is set to appear in court to face another charge also of violating the lèse majesté or royal defamation law based on an interview he gave to a Korean publication back in 2015. So it seems the political pressure is being piled onto the Shinawatra family almost by the day, and also being complicated because of the deteriorating relations between Thailand and Cambodia.
JP, thank you so much for watching the issue for us in the story as it unfolds. JP Ong there on what's happening over in Thailand. Well, Indian markets have joined the trading day. M&A activity is front and center in Mumbai today. We'll take a look at some of these stories right after this short break. Well, Indian markets trading right now. Let's take a look at the Nifty and see how it is trading to the weaker side. As you can see, pretty flat right now. $25,599 rupee sitting at 85.47. Some of the stories you're watching and some of the movers in the Indian markets today. Shares of defense firm Mazagon. Well, the state-run shipbuilder plans to buy controlling stake in Sri Lanka's Colombo dockyard. The nearly $53 million deal is expected to boost Mazagon's shipbuilding and repair business. The Indian firm is expected to take at least 51% of stake in Colombo dockyard and hopes to close the acquisition within 6 months. Mazagon now trading 1% higher in Indian trade today. And consolidation in the pharma space. Torrent Pharma is buying KKR's stake in a smaller pharma name. The India pharma giant is buying an over 46% stake in JB Chemicals for around $3 billion. It's the first step in Torrent's plans to merge with JP Chemicals. Torrent will later open up a mandatory offer to acquire shares held by retail investors. Torrent Pharma up 1%. And paint arm of JSW Group is buying Dutch paint maker Akzo Nobel's India unit. The transaction will be around $1.6 billion. India's biggest deal ever in the paint sector. JSW Paints will become the country's fourth largest company in the sector after the acquisition. And meantime, we're looking at Italian luxury house Prada, coming under fire right now for showcasing footwear strikingly similar to India's traditional Kohapuri sandals without initial credit. This comes after backlash from Indian artisans and politicians. Prada has now acknowledged the design's roots, calling the sandals, quote, inspired by traditional Indian footwear. Prada soles are priced upwards of $800 versus the $12 for the Indian originals. And before we go, one story we're keeping our eyes on, President Trump reiterating his criticism of Fed Chair Jay Powell as he piles on the pressure for more interest rate cuts. Investors have been rattled by the prospects of the Fed buckling under the presidential pressure and losing its independence. U.S. Treasury Secretary Scott Bessent weighed in on the issue in an interview on CNBC last Friday. Take a listen.
He calls Chair Powell too late Jay, and so he's obviously worried that the Fed's behind the curve again. And Morgan, I would just point out that studies have shown that people who fall down then tend to look at their feet, which makes them fall down more. And the Federal Reserve fell down on the American people in 2022, let the great inflation get away from them. They should have been hiking sooner. So maybe that's what we're seeing here.
There's a lot of market chatter emerging right now about the possibility of a shadow Fed. How disruption would the nomination of a new Fed chair this far out from the end of the term of the current one be for the market?
Well, look, I don't think anyone's necessarily talking about that. There will be two seats opening, or there will be one seat definitely opening in beginning of the year when board member Kruger leaves, and then the chairmanship will open up in May when Chair Powell leaves. So Chair Powell doesn't have to leave. He could stay on the board, not as chair. So there is a chance that the person who is going to become the chair could be appointed in January, which would probably mean a October-November nomination.
Your name has been floated in some media reports as a possible replacement for Fed chair come next year. Your response, is that a job you'd consider taking?
Look, I'll do what the president wants, but I think I have the best job in Washington. We're making meaningful change, working on the president's agenda every day. I get to work closely with the president. I think that, as I like to say, we've done peace deals, trade deals, and tax deals. We spent the first 100 days setting the table on those. Now we're going to be landing all those over the next 100 days. So I think that's going to be pretty exciting.
Well, that's all the time we have today on Inside India. Keep watching CNBC. Access Middle East is coming up next.